In April of 2020, I had a really great month. I was up somewhere in the neighborhood of $20,000 plus, and I made a video on it that you could find a little snippet of right here. With all of this volatility that we currently have in the markets, with things going crazy up and down, the ups and the downs have been definitely kind of amplified, if you will. So a couple months ago, I had a really tough month, and this month is possibly, like I said, I think it is the best month that I've ever had trading and investing. So during the month of April, it was obviously a really good run, but I wonder if any of you guys can relate to this. I have had experiences where I had good months, I had good times, and I blew it by getting greedy and messing it all up by not sticking to my plan. How many of you guys have ever been in that situation? It's really frustrating and really kind of annoying when you have a really good month or you make some good returns and then you mess it up by getting greedy and doing the wrong thing over and over. So in today's video, what I'm going to be doing is talking about some ways to avoid messing up like that and avoid making those mistakes. So stay tuned. So when I was a newer trader, one of the biggest mistakes that I would make over and over again was actually more frustrating than just having a bad losing streak, was when I would have a good winning streak and things would go really well in my account, and then I would give up all the profits by giving it all back to the market by being greedy, not sticking to my plan, doing stupid things like that. And today what I'm going to do is I'm going to talk about some ways that we can avoid maybe giving back so much of our profits. Now here's the thing, I'm not going to teach you some magical trick to never have losses in the market, because as you likely know, losing is a part of the game when it comes to trading, and we have to accept this. We're not going to be 100% perfect, but what we're going to talk about is maybe some ways to avoid giving back all of our profits due to negligence, due to making stupid decisions. By the way, I hope that during all this craziness that you guys are still finding ways to get outside. It is beautiful in Atlanta, and I took the chance to basically take a walk and make this video since it is something that's kind of pressing for me. It is something that's kind of pressing for me as I did have a good month last month, and so I'm trying not to give back those gains. So I'm kind of reminding myself by making this video. Okay, so we're back inside. It was a little bit noisy out there, but I wanted to get this message across, but don't worry, I had a pretty nice walk. So we're gonna be talking a little bit more about this topic of basically, if you make good money in the market, if you have a good month or you have a good week or whatever you consider good, right? If you have some good times in the market, how do you avoid giving all of those profits back? It's a very important topic because if you want to be a successful trader, this is going to be something that you either have struggled with in the past or will struggle with in the future. Everybody eventually has some good streaks, just like most people have losing streaks. So if you're going to have a winning streak, how do you avoid giving back all of your profits? Again, this is something that's fresh for me as I had a really good month in April, and I kind of want to mentally remind myself of some of my steps or some of my key rules, which we'll talk about in just a moment, on how to avoid giving back profits in the market. So I've got my candle lit, and let's get into it. So the first one that I'm going to share with you guys, so hopefully you can see that. Number one tip is to trade less. Trading less is possibly the easiest way to get you started in not giving away all your profits. And what I mean by this is that generally speaking, what happens to us as humans after we take a bunch of wins? Well, naturally what happens to most people is that we get a little bit arrogant. We get a little bit of an ego, right? You feel like a little bit more invincible. You feel like, I figured it out. And the second you say, I've figured it out when it comes to markets, when you think that you're just the next big thing, that's usually when the market will put you in your place, which is exactly what we're trying to avoid. We're trying to not let the market destroy all the stuff that we've just made, right? It's at the end of the day, it's up to the market whether or not, where the market decides to go. We don't have any control over that. All we have a control over is how we adapt to the market environment we're in. So the first thing that I'm gonna say is trading less is a great way if you've just had a series of wins or you've had a good streak in the market. to avoid giving back a ton of profit. Because again, a lot of times we get this ego, we get this kind of arrogance to ourselves, and we say, you know what, I'm gonna keep trading, I'm gonna build this thing to $1 million. And it's very, very easy to get that sort of ego going. And so my first tip, again, is to trade less. Don't look to take every single trade that you look at, because you're gonna be looking at the market with some sort of glasses on. You've got googly eyes for the market because you think you're invincible. So typically speaking, what I mean by trade less is only take setups that truly, really have a looking good risk to reward, right? They have a really, really good setup and they have a very high chance of making money, whereas they don't have as much of a chance to lose money, right? What happens to a lot of traders is that, we get into this winning mentality where we think we're invincible and we just start taking every trade left and right, thinking that it's gonna be just as good as all the other ones. And so I would avoid that by, again, trading less. Okay, so that brings me to the next big tip, the next big thing that I personally do when I've had a series of winners in the market, when I've had a really good streak in the market. The next thing that I do, and you'll probably hear me say this a lot of different times on my channel, I like to reduce my position size, okay? What I mean by that is if you're trading currencies, reduce the lot size. If you're trading stocks, my idea is to reduce the number of shares that you trade or the amount of risk that you put on the table, okay? So the reason that this is so important is really building off of the first thing. So not only are we supposed to take less trades, at least according to my plan, take less trades, only top tier trades that you see out there, but also on the trades that you take for a little bit of time while that arrogance is still fresh in our brain. Remember, emotion comes to anybody who's trading, right? And whether you admit it or not, there is emotion to some degree when you're dealing with money. Money is an emotional thing for most people. It is for me as well, right? And so to avoid the high running emotions that I've had from the winning streak, I'm going to reduce my position size so that it's not as interesting to me, if that makes sense. Right? Obviously, it's kind of like addicted to something, you always are going for that next threshold. Well, if you actually reduce your threshold, if it makes it a little bit less exciting or high intensity, whereas when we're done with a good winning streak, some of the best things that you can do, in my opinion, is reduce that high intensity and take it easy and chill out for a little bit on your trading. But you can still take good top tier setups if they fit your plan and reduce that position size so that you aren't risking too much on your trades. Again, we want to avoid having that high running mentality where we are basically feeling invincible. We want to let that wear off. And so the best way to let that wear off is to reduce that position size so that we don't catastrophically damage what we've just gained on the account. Okay, so next we're going to talk about the third and final tip, I guess, that we can talk about here, which is prepare for the inevitable. We mentioned it earlier in the video, but we talked about the idea that preparing for losers is kind of important, because when it comes to trading any market, inevitably markets cause us to lose sometimes. There's no strategy that is 100% perfect. If you're a trend trader and the market starts to range bound, most likely you're going to take some losses somewhere. If you're a range bound market, you trade reversals and the market takes off in one direction, well, you might be in a loss at some point. And so it's very important that you prepare mentally for losses. Again, all three of these are psychological tips. Because again, from a trading plan perspective, we should probably stick to our plan. That's pretty obvious. But from a trading psychology standpoint, we want to prepare mentally for losses and understand and accept that they are probably coming, right? It's almost better to be a little bit skeptical rather than optimistic all the time in trading. Because when it comes to trading, the markets will humble people who are way too optimistic and they put massive lot sizes on every trade, right? That's a very dangerous way to go about and will end up most likely in a catastrophic disaster. Okay, so preparing for losses does not mean that you should go around saying, well, I'm gonna lose all my money. That's not what I mean. What I mean by that is if you're preparing mentally for losses, you're saying, okay, my strategy has a couple really great winners behind it. I'm probably going to, it would be completely normal to see some losses come into the account. If you go ahead and mentally tell yourself that, then you will start to drop off that high running intensity in your brain that's telling you, oh, I'm invincible, I'm gonna make $1 million. So if you start telling yourself losses are probably coming, it's okay, it's completely normal, I expect to have losses too, then you won't treat it so as intense, right? You won't be so optimistic. And it's a little bit kind of a weird thing to say to yourself. You don't want to, obviously you want to be an optimistic person overall, at least most people do, I do, but you want to avoid being overly optimistic or googly eyed, as I mentioned earlier. So one of the other best ways to do it is, again, prepare for losses mentally. Okay, so trading is one of those things. It's a very, very mental game. right? A lot of failure in Forex or in stocks or trading in general does not necessarily come from just having a plan that doesn't work. Of course, there are people who can mess that up too. They don't have any strategy, they haven't back tested or planned anything. Then of course, that can be a problem too. Basically, when it comes to strategies, a lot of times people don't mess up the trading aspect as much as they mess up the trading psychology aspect. So if you've made $500 on your account, you've made $1,000 on your account, the best way to avoid giving back all that profit is to, yes, stick to the plan, but a lot of times most people mess up the psychology part where they get greedy, they triple up their lot size, and they do something stupid in the short term that messes up all of their gains. Again, I hope that some of these tips have been helpful to you. They definitely are things that I will be sticking to in my own trading, these 3 things, reducing my position size, expecting the losses to come sometime in the future, and only taking top tier setups will probably help to reduce the chance of giving back a large portion of the profits that I've made. Guys, if this video has been helpful to you, do me a big favor, give this video a thumbs up down below. Let me know in the comments if these things are helpful to you or if you have anything else to add, and we'll see you back next video.